What happened? Where am I? Am I alive yet?
Yo, good morning, homies. Good morning, maniacs. Today's a big day. Let me turn on the light. Today's a big day. We got FOMC. I didn't take trades this morning, but I think I fixed everything because I literally had 4 winners today. In my mock trading, I had 4 winners this morning, 2 on Bitcoin and 2 on Ethereum. I think I fixed what I was doing wrong. Today we would have made like $300. I think I fixed it all. I'm still gonna mock trade for the rest of the week just to see if I indeed really did fix the strat. But I think I fixed it because we literally won 4 times today. And it's not even it's 8 a.m. So I literally would have only had to trade like an hour and a half. But I think I fixed everything. I went long 4 times today. I mean, this one is still going. This Bitcoin one is still going. So is Ethereum. They're still actually like getting me a lot of profit. Like we're at 2.25 R. Now, so this trade's actually running. It actually, I think this trade here could go crazy until FOMC. It could go even higher if it especially if it breaks these highs still left here. Ethereum, we had first trade was 3.78 R. First trade on Bitcoin was 2.17 R. This trade right now is at 2.3 R. Ethereum, this one is like kind of slower. It's like 1.42 R, but I'm not targeting 2 R anymore. I'm targeting key areas. So I am targeting 2 R. Like these ones were 2 R, but the second trades were not targeting 2 R. They were targeting the previous highs. Okay. And then like I take profit, heavy profit, and then I see if it keeps going. And as you can see, this one's keep going. This one looks like it's about to keep going too. Yeah, there we go. Ethereum's about to rip too. So now we're at 1.57 R for Ethereum. Bitcoin's about to break even higher. So yeah, we're at four winners today. And really with all the R's combined, I think it counts for like 6 winners. So I think I fixed what I was doing wrong. And I'm really excited. I think I want to do some more back testing this morning, like go to yesterday and see if I could figure out, see if we go back to yesterday, because yesterday, remember, I lost. But I want to see if I could re-watch it and see if I can find where to win instead of lose. But we got about 3.5 hours until FOMC. And so I figured we can do some market overview this morning. Figured we can do some technical analysis, like where's the market looking right to this morning. Do some, what else did I want to do? Technical analysis, and I want to do some back testing. Yeah, see, look at Ethereum. It's even going higher. Bitcoin just went a little higher too. Where's Bitcoin at now? 2.35 R. Ethereum's breaking up to the upside. Whereas Bitcoin or Ethereum now is at, that position would have been at 1.68. So we're almost at 2 R for Ethereum's position down here. It's not done yet. And I think I figured out what I was doing wrong. I wasn't being patient enough. Well, it wasn't being patient enough. I honestly just didn't really pay attention to it. I should have paid attention to what I missed. But I was just like, instead just waiting for candle closures outside of the orb or whatever. But there's something I was missing, and I'm glad I spotted it now. Oh, let Ethereum's trade. Ethereum's at 2.58R now. Dang. Dang, I think I fixed it. I'm really excited. I think I fixed the strat. Oh, I'm so excited. I think I fixed it all. Oh, I'm so excited. So this morning before I went live, I just spent time by myself, not on camera, just learning, just back testing some things, just figuring out the strategy, just figuring out what I was doing wrong, watching some YouTube videos, and dude, I think I fixed it. I think I fixed it. And now you guys have heard me say that before, but like I have 4 mock trades today I've already taken. As you can see, both of them were winners. Both of them were huge winners. So, I think I fixed it. I think I fixed it. What I'm doing this week is I'm no longer trading throughout this entire week. I'm literally taking today, tomorrow, Friday, Saturday, Sunday to just mock trade, and then Monday, if I can literally win every single day this week, today, tomorrow, Friday, Saturday, Sunday, like throughout my back testing and stuff, then Monday we execute and should be winners next week. We should be. So that's why I'm being patient with my learning and gonna put this all to the test for the rest of this week. And I'm gonna do all. So tomorrow we'll stream at normal time, 6:30 a.m. Friday we'll stream normal time, 6:30 a.m. Today we did a later stream start because of FOMC that's happening today. We're going to cover it live. But I'll be doing the mock trades with you guys live to see if we can catch those winners live, fake trading, right? We're just going to do like where I just throw in a short and long thing like this, and we'll just see if they win. And as you can see, all 4 of these, this is Ethereum down here. This is Bitcoin up here. All of them are winners. And 2R winners, not like 1R, 3R. They're all over 2R winners. This one's 2.8, this one's 2.58, this one's 3.78, and this one's 2.17 R. So all of them are like. So today we would hit 2.17. That's 5.2 up here. 5.2 plus 3.78. So that's like 8.9. And then we would have hit almost 11R today if we would have taken these trades. Pumani, what's up, dude? Good morning. Good morning, Pumani. Pumani, real fast, I just want to say thank you for showing up, dude. Even though I've been losing this week, I appreciate you still showing up and showing love in the streams. Seriously, it gets me excited to keep doing this challenge and keep pushing on. So I appreciate you still showing love and hanging out in here, even though it's been a rough month. But I'm hoping that just keep that in mind for the first giveaway. For sure, for sure. Okay, it looks like this trade's done now. Raj. Oh, Kendra said, when is that important meeting happening today? 11:30 a.m. 11:30 a.m. So we got about 3 hours. Traj said, what's up, Traj? Are you looking for any shorts today? So Traj, just so you're aware, dude, XRP. Did you guys see the news for XRP today? Did you guys hear the news? XRP, I don't know if XRP is good for a short. It might rip today. It could rip. It could go crazy today. Yeah. So basically, if you guys didn't hear the news, let's see. Let me show you guys what happened. So this morning, yeah, where is it? Right here. This morning, the SEC officially drops Ripple XRP lawsuit. So the lawsuit for XRP is officially closed. Like, it's no longer a case. XRP is now not not labeled a security, right? It's labeled something different, right? That was the case. Let's see. Let me make sure I'm not spewing the wrong information. And what a monument moment. The U.S. Securities officially dropped its lawsuit against Indeed, the company CEO. Right. Right. It's not Rad D Great. Good morning. You think it'll go down? I don't know. I haven't even looked at the chart. That's one coin I don't really trade because XRP is volatile. You know, maybe if the volatility might slow down now that this case isn't here anymore. Yep. So these trades are done, but these are all winners. These are all winners. So another four winners today. I would be done trading. So basically, I'm done trading now. I mean, I got 2 winners back to back. I'm done trading. Right. So I mean, I didn't really trade, but like I'd be done trading. Because you don't need more than that. The more you start over trading, the more you get freaking wrecked. Then why didn't you take them? Because I wanted to test if what I'm fixing works. So I didn't know if these were going to work, right? I didn't know. I thought maybe I could have gotten stopped out on all these. Like, I didn't know if they were going to work. And I'm taking this time because of after losing over and over again, right? We've been on a losing streak for all of March. We've lost, like, literally. We had a winner last week, like 1 or 2 winners last week. But really, we've lost like 7 trades this month, 8 trades this month. And so I just was like, I can't figure it out. I couldn't figure it out. I'm like, what am I doing wrong? I'm following the strategy. And I think I finally figured out what I was doing wrong. Did you move your stop loss? Yeah, this would have been moved, right? So these hit, right? What did this hit? 2.91 R. So stop loss would have been, well, technically stop loss would have been at break even, but I think what I'm going to start doing is moving it to like strong lows, like moving it in. So once we hit 2R, I'm going to be really tight on the profit. And then I don't care if I get stopped out. So what happened or what did you do wrong? Yeah. Let me explain it. Let me go into that. So what I noticed I was doing wrong was not waiting for break of structure when orb broke. Okay, so in the past, right, I would just wait for, now today's a kind of a bad example because it did what we wanted it to, but in past, it doesn't always do what we wanted to. So what do I mean by that? With the 1 minute, we had orb formation, it broke out. Okay, so one thing I need, right, the breakout, the test, and then the push, right? So we got the nice breakout. We got this candle that failed to even come back down and then push, right? So this entry candle, the breakout and the fact that the candle went to doji instead of pushing back in, that's my entry signal. and I shoot for, right, just the 2R, which is right to this high to left here. Okay. Now here, what do I wait for here? Here, I wait for the break in. Okay. I wait for the retest, and I want to see what does what happens here. And as you can see, not only do we have a break in, we had a retest, we had a push out. Okay. That's not my entry. Before, this would have been my entry, this candle. That's too early. Okay. That's way too early. Then I get this candle, the retest. Okay. Then I get this candle, another retest, push. And then I get this candle, a green candle that is higher than this candle. Enter on this candle, stop loss at this low. Right to, for me, for this trade, since it was the second trade, I would only try to take profit at this high. And then, which is not a 2R, right? I'd only shoot for this peak here, which is a 1.79R. I'd take profit there. And then I would move my stop loss to break even. And I would ride and see, do we get even further? And as you can see, we eventually did get further, right? We eventually got, you know, almost 3R here on this trade. But so like, let's go to yesterday real fast. Let me go to a different screen so we can get a better picture. But let's go to, let me close out all this stuff. Let me delete all these lines. Okay, I want to show you. Let's go back to yesterday and show you what I messed up. So Tuesday, 6 a.m. What time are we on? All right, 5 or 15 minute. Okay. This is what I messed up. So let's get to the 6:30 candle. Right there. What is that? 6 a.m. 6:15. One more. Okay. So this is our orb, right? This is our orb candle. Orb high. Orb low. Okay. And then let's go down to the 1 minute. Okay. Or no. We'll stay on the 15. Okay. Okay. Candle breaks. Let's go down the 1 minute. Okay. What I need to see here, okay, is as that 15-minute candle breaks, right, I need to see a push up, a retest. I need to see a push, but a break of structure, okay? So this technically would have been an entry signal, right? And yesterday we got the entry signal, but it decided to just, you know, not play it out. So this right here, let me turn off the magnet real fast. So I think we know that today it didn't work out, right? But this would have been my entry. So here we have break. Now it's retesting, push in, retest. Now broke back into the orb. That's not good. Broke back out. That I entered yesterday on this candle here. I entered on that candle there. Okay. And I did this. This was my mistake. Okay, so this is what I did. I said, oh, it broke back into the orb. You know, I think we put stop loss up here. And I'm like, cool, sick. We're solid, right? We're good. Shoot for 2R. This is literally our trade. And as you know, it failed, right? So this was the losing trade yesterday. Where's 2R? Okay. And as you know, as we look into it, it ended up failing, right? Well, we know it ended up failing. Let's see. There we go. Pushes in. Boom. We failed, right? What's my issue here? What did I screw up? I screwed up here. The fact that this candle did not break structure, right? This candle did not break structure. The candle that broke structure was this candle here. So technically, I should have actually entered here, stop loss at this low here. And this trade still would have failed, right? But that's okay. That's okay. Trade would have failed, okay? And I would have got stopped out. So this would have been the candle I wait for. Because what did it do? It broke structure to the downside, post a 15-minute candle close, okay? Now, here's the second opportunity, okay? Here's the second opportunity. And this is something new that I'm going to start trading, okay? So when you look at orb here, let's do the fib retracement real fast because we want to see what's the 50% line here for the orb, okay? Now, we know this works because we can see it right now. But this is a new portion of my strategy that I'm going to start trading, okay? So when we fail to break the orb, right? Clearly this trade failed. We could have probably tried to take one more here because it did what... Actually, no, it didn't. It didn't break structure. So we would have never taken a trade if we're doing the right way, right? Because we wait for a break of structure. Did not break this low here ever. So what does that mean? If it's a failed bearish move, it's going to go to the what? Probably the opposite end of the orb. But we don't shoot for the opposite end. We shoot for the 50% line. So the midline between the top of the orb and the bottom of the orb, and that's a trade. So how can we spot that? Okay, you see here, taps orb, pushes off, but it fails to break this low here. Pushes down, fails to break this low here. No signals yet. Pushes up. What does this push up do? Break structure. Pushes down. What lit? Break. Okay, break, retest, push, push, big candle up, right? Now, I don't enter on this candle. I don't enter here. I wait for the one more candle. This candle, what does this candle do here? Break structure. Enter on this candle. Stop loss to this wick. We shoot for not a 2R. Okay, we don't shoot for the 2R. We shoot for midline, which actually I think is a 2R. It's almost a 2R. So we shoot for the middle line. Okay, and we take profit at the middle line. And if we can, we hold to the other end of the orb. Okay, so shoot for middle line. Stop loss is now at break even. Let's see if we can go. Let's see how far we end up going. So we wouldn't have even gotten stopped out there because it didn't tap break even. Let's see if we can. I don't remember how long it takes to go to the other end of the orb. I think if anything, I think it breaks out the orb again. Okay, so now we're like at probably a 3R, 3.35R. So now stop loss. Let's make this red. Right? Because what do we do at 3R? We move our stop loss up to 1R. So where's 1R? This is what our day should have looked like yesterday. Okay? So stop loss is now up to there. And let's see. Do we keep pushing or do we get stopped out? Okay, we got stopped out. So a winning trade there. We got all the way up to take profit of 3R, 3.35R. So I would have taken profit at 2R, taken profit at 3R, and then stop loss there, right? I would have done probably, or sorry, not 2R. I would have taken profit at the blue line. I would have taken another profit at 2R, probably 20%. So I would have done 50 at blue line, 20% at 2R, another 20% at 3R, and then stop loss is moving up as we move. And that's a winning trade. So now I'm done. Now I'm just waiting. What happens next? So we got one loser, and this winner outweighed that loser. Should have been a winning day. So now what do I wait for? It looks like price is coming back down to the bottom of the orb. And now I don't take, now with the middle line, this is important. We don't take trades at middle line. We take trades at orb low, orb high. That's it. Okay. We don't take them at middle line. All right. Let's see if we get another, I think we end up getting a trade, but I think it actually ends up losing for us. Okay. So there. Remember before in the past, actually, no, I would have never taken this trade because it tested, broke back in, and then pushed up. So we don't have a, oh wait, actually, no, that would have been a trade. Sorry, let me, so here, with my updates of figuring out what I'm doing wrong, what do we have here? Test of orb. It broke out. Big push back in. Next candle. What does the next candle do? Breaks the highs here. These two highs. Breaking structure to the upside, which we saw here. It pushed off when it last tapped the orb. So let's see. Can we tap and target the middle line again? I don't know if we get that trade. So remember, we're just shooting for middle line, which is, what is that? 1.5 R. Let's see if we get middle line. Okay, that one failed. That one failed. That's a losing trade. Honestly, at that point, I'm probably done trading. Like, if I won already, lost one, and then we lost again, I'm done. I lost twice for the day. But honestly, it looks like we might get another opportunity at the... Yeah, literally, you're probably getting another opportunity here. Potentially to middle line. Let's see. We're just gonna do it for the strategy's sake. Okay, so what do we get? Retest again, and now it's like a double bottom. Okay, you got double bottom here. Tried to break out again, failed, and then pushed and broke structure of these lows. Shooting for middle line. Let's see if we get it again. Okay, stop loss is at that low. Okay, let's see if we get it. Okay, if that one failed again. So pretty much once I have the winner, stop trading. That's what I'm getting from this. Let's see. I wonder if it does actually end up hitting. It is failing to break that. Do you see how it keeps failing though to break this area here? Every time it pushes back in, comes in, pushes back in, right? And I think it actually does end up hitting the middle line. Okay, so if we would have taken a trade of, if we would have like waiting for the trades, right? Oh, you know what I think I'm doing wrong? Okay, I'm not getting breakup structure. I'm looking at market structure shift. So I'm doing it again. I'm making a mistake again. I'm making a mistake again. Over here, what did it do? Over here, it broke structure to this high. I'm making the mistake again. I keep making this mistake. It didn't break structure. This would have been the structure, or this would have been the structure I had to wait for. And I'm obviously not going to take that trade up there to the middle line by that point. So I'm making the mistake again. I should have taken these trades. They're all wrong. So this one, okay, this one actually technically should have been the trade here. This one should have been a trade, because what do we see here, right? I keep making the mistake. I got to remind myself. And this is why I wanted to do some back testing with you guys this morning, so I stopped making the mistake and I keep seeing it. What is this high? This high here made a lower low from this low. Okay, so push back in, retest, break up. It did not break structure till this candle. So what do? Enter. Stop loss right outside this orb at this candle because it broke structure. And then let's see, did we get a 2R here? 1.86. So we got close. What I could target here is not middle line, right? Look at left. We target a peak. Okay, so TP would have been at this high here. We hope it goes to middle line, right? We hope. So what I would have done here, which I should have done the right way, and I need to remind myself, wait for that break of structure. Wait for break of structure. Wait for break of structure. Wait for break of structure. Okay. And I shoot for the previous high to the left. Okay. So here, take profit right there. Stop loss to break even. And as you can see, that's a winning trade. Okay. It eventually would have gotten a stopped out. Okay. Now what do I wait for again? Okay. Push down. Fails to break. Pushes. Break structure here to the downside. But for me, I don't know if I'm taking that after 1 win, 2 win, and 1 losers, because I just doesn't seem to want to go lower. And if you remember of this day, all the liquidity was above us, right? So wait, breaks, pushes in, retest, push off. We don't enter here. Break structure. Boom. 1 more trade for the day. Stop loss not out here. Stop loss is at this low where it basically failed to break lower. Shoot for previous highs to the left. Okay. We get that. Take profit. Stop loss to break even. So stop loss for this trade. We're just shooting for the highs, right? Shooting for these highs and seeing if we can hold it longer. And as you can see, eventually we get to hold it all the way to the middle line. So that one would have been a 3.37R, right? So stop loss would have been 3.37. We're putting stop loss at 1R. Let's see if we can hold it even longer. Okay, let's see if we get stopped out or if it actually keeps pushing. Do we get 4R? Not 4R. So we're at 3. Where's 4? Let's see where 4 is at. See if we get 4R. Looks like we might actually. Okay, we did. So now stop loss. Now stop loss is at 2R. We'll just put it there. Stop loss is at 2R. Now we're shooting for 5. Did we get 5R on this? Killer trade to close out the day. I don't think we will. I think we get stopped out. Oh my gosh. Oh my gosh. It gave us 5R. Dude. Is it going to go to the other side of the orb? Let's see if it goes to the orb. What is that? 7R almost? Wait. We hit... What is this? 6R basically. I'm going to say it's 6. So let's go 3R. Or no, 4R. Sorry, 4R. Stop loss is now here. And I'm shooting now. At this point, I want top of orb. Oh, we got it. Oh my gosh. What is that? 7.5R. Stop loss is at 5R now. Do we break the orb too? That would be an amazing trade, right? So do you see how I'm fixing it though? And I figured out what I was doing wrong. So honestly, what we're getting to here is kind of a signal, right? That we don't have the signal yet because it hasn't broken structure to the downside to target the other end of the orb, right? Because what did it not do? It didn't break structure. It did not break structure. And so that's what I'm learning that I need to wait for is the break of structure. Okay, so let's see. Do we get stopped out or does it keep pushing? Okay, we got stopped out. Right there. Trade's done. So that's 1, 2, 3 winning trades and 1 loser. And this one's a gigantic winner, right? So I think I figured out what I did wrong. And I literally was making the mistake again this morning I literally made the mistake again this morning over here. I wasn't waiting for break of structure. Right? So, I need to wait for break of structure. That's what I'm doing wrong. And honestly here, it looks like we actually are getting... So that we broke structure here, broke it. I'm not going to take this trade if I was actually trading in the daytime, but technically you're getting signal. Push off, break of structure, could potentially target the middle line here. Let's see if it does it. Let's see if it does it. Just as a mock trade, right? So you wait for the rejection. Push, push, push. Break of structure to this low here. And now you're just shooting for first this low to left, right? First the low, which isn't a big trade. 0.93R, but profit is profit, right? And then after you hit that, you're shooting for middle line if you get it, right? So let's see. Do we get the peak? Okay, we got peak. So where's stop loss now? Stop loss is now at break even. Okay, after we hit right there. Stop loss is now at break even. Do we hit middle line now? So let's target now middle line. Do we get middle line? We got middle line. Okay. I mean, dude, guys, that's another 1.64R. Okay, now let's see what it does here. So for me, I would, at this point of the day, because I've won so many times, I want to move my stop loss to a strong high. So right there, that strong high. Let's see if we get stopped out or if it keeps pushing. Okay, we got stopped out. Still, that's a great trade. That's a great trade. We don't take trades at the middle line. Now we just let it see what it does. Let's see if we get more trades throughout this day. Let's see if it goes to orb high or low. Let's see. Okay, it looks like it's going to orb high. Maybe not. Okay. Okay, boom. Okay, what do I see here? One, we have this high to the left. Okay. What do we get? Push up. Break of structure that taps the orb. Doesn't break out though. Then we get a push out of the orb. That's a strong bullish candle. And another push out of the orb. These candles are irrelevant. So let's just go back here. So, right, we know there's a peak to the left here. Let me actually move it not from the wick. Let me move it to the body. Okay. Test the break, break out, and then break structure. Enter on this candle, stop loss to the first candle that tested the orb. Okay, not to this low, just to this first candle. And then honestly at this point I think I'd just shoot for 2R. I'd want to just go for 2R. I don't know if this one works, but that's what you wait for, the 3 confirmations. Let's see if this one works. Let me also move my stop loss so you guys can know where my stop loss is at. See if it fails or wins. So stop loss is at that candle low there. Let's see if we get a winner or a loser here. Okay, 2R tapped in. Stop loss is now at break even. Essentially right there. Okay, another 2R. Okay, let's see. Do we go higher? Where's 3R? Let's see if we get 3R. Dude, holy smokes. Yesterday would have been freaking killer if I was actually a better trader on that day. But they're not failures, they're learning lessons. Let's see, do we get... Oh my gosh, I think we're gonna get 3R. Yep, 3R. Dude, holy crap. Good morning, Bulletproof Dean. Oh my gosh. Did we get 4R? Where's 4R? I think I fixed the strategy, guys. Oh my gosh. What is that? 5.5R. Okay. So where do we put stop loss? To 3R. Okay, stop loss is here. Okay, so now we shoot for 6R. Do we get 6? Or do we get stopped out? No freaking way. Okay, we get stopped out there. Who cares? That's a freaking killer trade. What do we get on that? 5.68R and get stopped out at 3R. I think I fixed the strategy. That's how many winners is that today? 1, 2, 3, 4, 5, and then 1 loser. I think we would have made $1,000 yesterday if I would have had this. I think we would have made $1,000. And so I don't want to rush it, okay? I want to take the time for the rest of the week where we continue doing these mock trades throughout the day. So like today, I want to literally practice throughout the day as we're going. Like where are we on? Let me go back to that other. And I'm literally just going to keep doing mock trades. And I'm going to build my confidence. I mean, look at this trade, dude. You freaking kidding me? This would have been this morning's trade. We're still, look at Ethereum's trade. It didn't even stop us out. We would have been at break even. What is that? 3.82R. And it's still ripping. Today I would have already had 2 trades. All over 2R. So right now stop loss. So we hit 4.5. So stop loss is at 2R on this trade now. Stop loss is there. Next one is 5R. Let's see if we get 5R here. Okay, this one, what are we at here? 3 point. So stop loss is at 1R over here. Stop loss is there. And then we're shooting now for 4R on Ethereum. Did we get it? No, not yet. Okay, well, that hit 5. So now we're at 3R. Holy smokes, guys. I think I really fixed it. So let's see if we get 6R now. Ethereum just missed it. We trading today? No. Bulletproof Dean. I'm doing some mock trading right now. I think I fixed my strategy. And I think I really fixed it. Like really fixed it. And I think it's gonna be really good. So I think I fixed it. Like I like everything is showing that I think I fixed it. Man, you guys have no idea how hard I've been working at trying to fix this freaking strategy. And the thing with this strategy, it's super simple. It's not complex. I don't even have an indicator on the screen. I literally took off all my indicators. And I just wanted to look at market structure and orb. I took off all of them because I was like, I just want to start from a blank slate. I don't want even EMAs to influence me. I just want to focus on the structure. And was that what was wrong? And it was. I was messing up the break of structures, and I think I just fixed it all. Oh, freaking A. I'm excited for next week. So, Bulletproof Dean, the rest of the week, tomorrow and Friday, we will just be doing mock trades. Okay. Why am I doing mock trades instead of taking real trades? Because I want to make sure that I really did fix it. Okay. Because if it works yesterday when we do the back testing, if it works today as I'm live trading it, if it works tomorrow as I live trade it, And if it works Friday, as I live trade it, what do you think is going to happen on Monday when I go to live trade it? That's 3 days. And then if I do it Saturday, Sunday too, because I'm planning on doing it Saturday, Sunday, that's 5 days in a row of practicing the strategy as I fixed it, right? If I really did fix it, 5 days of practice. Monday comes around, we get our game face on, we implement it on Monday. What do you think happens on Monday? Right? So I want to be patient. I want to take the time to back test it with real data, not like going in the back testing, but like testing it in the real market, of just doing demo trades or mock trading, right? And see if I can basically end this week profitable with fake trades. And if I can, and if I really think I fixed it for next week, we should be solid. We should be back on track. So I'm really, really stoked. I mean, as you can see right now, it's working. So, and today would have been 2.17R. This one I think is at 5.5R right now. This one's at almost 4R, and then this one over here was 3.78R. So we're having big days. Exactly. And this strategy is not going to be 100% winner. Okay. If you think because I've won 4 trades today and we won like 5 trades yesterday in the fake trading, right? It does not mean it's going to be a 100% winner. There will be losing days, right? There will be losing days. But again, what do I make sure we do with our losers and winners? What do I make sure? Who can tell me? Who can tell me what I do in every trade to make sure that even though if we have losing days, what do we not do? Let's see if someone responds. Stop loss, right? But what with the stop loss, right? What does every trade have? Chase? Yeah, we don't chase, but with the risk manager, right? What do I make sure with that? That the winner's something with the losers. Let's see. Outweigh. Exactly, Pumani. Right? Outweigh. Yeah, I couldn't find the word. Right? Exactly. P2P trader, Pumani said it, that the winners always outweigh the losers. Okay? And as you can see, if this strategy works, right? 2.17R, 6R almost on this one, 4R, okay, we hit 4R on this one, and 3.78R. That's just if you don't include the points, that's 2, 8, 12, 15R here. So even if we had 15 losing trades, we're still winning. We minimize risk, right? We minimize risk. We're only risking $50 a trade, right? I've had 16 losing trades and we've gone negative for the first time ever in this challenge. And we're only negative like $40, I think, because my winners outweigh the losers. Now, we're on a losing streak, right? We went negative for the first time ever. But imagine if I didn't have the risk management. What do you think I would have done to the account? I probably would have blown it if I didn't have the risk management. If I think, oh, today I'm really confident. I'm gonna double down on my risk today. I'm gonna go $100 a trade. What do you think I'm gonna do? I'm gonna blow the account. But the risk management has protected me from blowing the account. And we've had our first losing trade that got us into a negative, right? But if I have one winner, where are we back? We're back into profit. And so I think if you could take anything out of the crappy month we've had so far, if I could have you guys take one learning lesson from me this week or this month of where I've absolutely sucked for the first 2 weeks of March, the best learning lesson out of it all is that the risk management worked. The risk management worked, right? We didn't blow the account. We lost 16 times and we did not blow the account. How many people can say that they've lost 16 times in a row and their account wasn't blown, or they like almost lost it all, right? We lost 16 times and we went negative for the first time ever. And so I think that's a testament that even though we had 2 terrible weeks with our trading, our risk management saved us and protected us from blowing the account. And now I've been able to reassess and potentially fix it. So now if we have one winner, we're way back in profit again. We get two winners, we're way back in profit again, and potentially even knock out the first tier. I mean, if we would have taken these trades the last 2 days, we would have been done. We would have been at tier 2 already. We would have been at $1,000 in the account. We've been at actually probably even more than that. We probably would have been at like 2K in the account. So we're at tier 3 just by these 2 days by fixing the strategy. And so I cannot, if I really can, if I could have you guys walk away from one thing this week, even though I was a terrible trader and lost a lot, walk away with that. His risk management saved him. And take that as that's how important your risk management is in your trading. Okay? It's the most important thing. Profit is profit. You'll get it as you trade. But if you don't have the risk management that allows you to continue trading, to continue to stay in the game, you'll never be profitable. And so make sure over everything, make sure you protect yourself. Make sure you protect yourself. Make sure you have that risk management and do not change it. Do not change that risk management. If anything, go lower. Okay, that's fine. If you want to go lower in risk management, whatever. Go lower in the what you're risking, that's fine. But do not ever go $1 over your risk management. Okay? And what's our risk management right now in the challenge? I think you guys should know that. What's our risk management right now? What's the dollar amount? $50, right? Yeah, P2P knows. $50. And the thing that I'm actually pretty proud of myself for is I can really say I never went over $50 on one single trade throughout this entire journey. And you guys seen every single trade. You guys can go back and look at my copy trades. You've seen I've never lost more than $50 in a trade. And it's protected me for that exact reason. So yours doesn't have to be $50. Okay, I'm not saying your trading has to be 50, but figure out what that dollar amount is and do not go $1 over. Don't even go a penny over that amount. Be disciplined and stick to that amount. It will protect you, I promise you. And so like it sucks to have that. I don't think it's failure. I think it's a learning lesson. No, you're good, Pumani. You're good. 10%. Yeah, essentially 10%. 10%. It's which is $50 for me right now. So I do it based on the tier, right? I do it based on the tier. So it kind of percentage-wise it fluctuates because if we have $800 in that account, that's not 10% of the account, right? I should be upping it to $80, but I don't. I stick to 50 until we get to $2,000 in the account, and then I'll up it to $100. But then as we grow, it'll get less than 10%, but it always is at the max 10% of the account. Good morning, bag holder. What is okay, so this one hit 4R. Let's move the stop loss up to 2 now. Stop loss is now here. And then we're shooting for 5R for... Oh, wait, did we already hit 5R? Okay, well, basically we hit 5R. I'm going to move it up. So now we're at shooting for 6R. Oh, wait, we got to move it to 3R now. For Ethereum, 3R. And then now we're shooting for 7R. Right? Or 6R, sorry. Okay, we're shooting for 6R now for Ethereum. And Bitcoin still hasn't stopped me out. We're still shooting for 6R. And then we'll move the stop loss up. I know, right? But doesn't this get you excited for next week? Because imagine, right? Imagine I can do this today. Imagine I can do this tomorrow. Imagine I can do this Friday. What do you think next week's going to look like? Imagine what next week's going to look like. We should run pretty quickly next week. But I want to be patient, right? I want to be patient. I want to take the time to do the demo trading before I take one day of testing and be like, all right, I fixed everything. I want to get at least 5 days under my belt before I actually put real money into this. I want to really see if I fixed it. And if I did, if we could end this week profitable, right? And that tomorrow we're profitable and Friday we're profitable. And then when I backtest Saturday, Sunday, we're profitable. Do you know how confident I'm going to be going into Monday, Tuesday, Wednesday, Thursday, Friday of next week? And do you know how quickly we will run up the account? If I'm correct, you won't be in, right? You won't be negative long. Probably it'll take me 1 day. I mean, if it's at this rate, right? It should take me 1 day. Yeah. Now there's no promises, right? We could lose. There's no promises. And that's the risk with trading, right? But it's looking good. Now there's another thing I can do too. So 1 minute time frame's a little more risky. Okay, there's another thing I can do. And let me show you the other thing. So look over here on the left side of the screen. This is the 15-minute time frame. Okay, so what I could have done this morning is this. What I could have done is this morning. So as you can see here, we have 15-minute break, 15-minute retest, and then what do we get here? 15-minute break here. What I could have done, also another opportunity if I wanted to be a little less risky, because 1 minute time frame can be a little bit risky, is I could have waited for I don't want to. Let me go over here. So cancel. Let me save this real quick. Let me go over here so I can show you what I mean. So if we go to this morning, okay, let's go to this morning. What am I looking at? Bitcoin, perfect. Let's go to this morning. Let's get the orb, okay. Where's the orb? Oh, orb's down here. Oh, I'm on the 1 minute. Let's go to 15-minute time frame. Okay. So what I could have also done, the other option I could have done, where's 6:30 candle? Okay. This is the other option. Is that the right candle? Okay. The other option I could have done is wait for 4 15-minute candles. So you wait for 45 minutes and you see what the first 4 15-minute candles are. So we get the orb, we get a break. We get a not a break of structure. I mean, this one actually is technically a break of structure. So you could have actually technically entered on the first 15 minutes of the day. Why? Because look at this high to the left here. It broke above. And also, dude, oh my gosh. And FOMC hasn't even happened yet. So we broke structure here. Something that I didn't add to the chart this morning, but something I will be adding when we trade is I will be marking out the previous day highs and lows. So we're on Wednesday, so I want Tuesday's highs and lows. Is this Tuesday over here? Yep. So Tuesday high, and I'm gonna make it like a light blue. And then Tuesday's lows are down here. Tuesday's lows. Okay. So not only did we break structure from this high here on the 15-minute, off rip, break structure. I would probably not enter here. I would wait for 4 candles. Break, retest. What is this candle? Another break. Stop loss or entry there. Stop loss to the wick of this candle. And then you shoot for you can shoot for 2R, which you got, 2R hit, or you could shoot for previous high to the left, right? So like maybe first TP would have been at that spot there, which is at the previous high to the left. TP, stop loss to break even, and then we wait to see just how high we go for the day. So if you want to be a little less risky, you hop up to the 15-minute time frame and you just wait for 15-minute time frame confirmations. But as you can see, we hit all the way on just this trade 2.04R, right? So I could be a little less risky and wait for a 15-minute time frame instead. And I'll probably do this on the WEEX account, be a little less risky, and shoot for like things like this on the WEEX copy trading. And same watch. Okay, so let's go to let me hold up, let me let in. Sorry, I had to let the intern in. All right. What was I saying? Yeah, to be a little less risky. Now let's go to Ethereum and check out Ethereum's 15-minute time frame. See if that would have worked for us. Where's 6:30 candle? Okay, 6:30 candle. Where is that? I'm on the 1 hour. 6:30 candle. Where are you? $6:30 candle. Right there. Okay, so we got 6:30 candle right here. Okay. Now, what do we need? We need... Okay, or break 15. Technically, this 15-minute candle broke structure, but if I want to be patient, right, what do I need to wait? This candle is a great one, because not only do you have a break, retest, and then push, and then breaks these highs here, you're good. So there you go. Enter here. Stop loss. I would put my stop loss at this candle's low, and then you shoot for me, probably taking profit at this peak here, which is pretty small, but it's profit, and then I shoot for 2R2. So right now we would have hit it. We would have hit 2R here on Ethereum too. So even if you wanted to go to the less risky route, you still would have won today on taking just 2 trades, Ethereum and Bitcoin. And that's for our day. So that's a great day, right? Great day. And it could even go higher now. It could even go further. But I wait for that break-in structure, and a good break-in structure, not like a barely break-in structure. Like this one's not enough. This candle gives me that confidence, right? I mean, you could have even technically waited for this one, right? So 1, 2, 3, 4 candles. You could technically have waited for this guy if you want to be really patient. 1, 2, 3, 4. Why this one? Because you got push up. Higher low. This one breaks the structure of these 2 candles here. You enter on this candle, stop loss at the wick of this candle, and what would that have given you? That's almost a 3R there. So if you wanted to be even more patient, you could have waited for the 4th 15-minute candle, right? So even that strategy works too. So I'll be doing that also on the 15-minute time frame and watching and being more patient. So I think I'm getting excited. And we'll be doing that tomorrow too. Looks like we are about to get stopped out here on this one. And did this one get stopped out? I don't think it did. It didn't. It's still not stopped out yet. But it's getting me excited, guys. It's getting me really excited for the future. I hope it's getting you guys excited too. I'm gonna go to the restroom real quick. Sweet. So these trades are done. All of them are done, but winners. So these ones ended up getting us, what did these get us, max? What did this one get us? This Ethereum trade got us 5R. And this Bitcoin one got us, what is this, 6R? 5.48R? Okay, 5 Rs. I'm happy with that. We'll see if we get other opportunities throughout the day. See if it comes back down to the orb. Maybe we can do some like quick scalps to like orb high to mid align, or maybe it gets us another orb entry and pushes off, right? Because FOMC still 2 hours out. All right, let's see if we get more today. Important thing to note too, we don't take trades up here. We don't take trades that are like doing this. I only take trades at my key areas, which are orb. Yeah, pretty much orb. Because right now the previous day lows and stuff are not even close to us. So pretty much our only key areas we take trades at right now are orb. So this day proved to be successful. You guys want to do some more back testing? Should we do some more back testing here? I'm gonna go make some more coffee real fast. And then I think I'm gonna do some more back testing. So if we would have taken these trades, we'd have essentially been done basically by, we took two trades each on Ethereum and we were done by 9 a.m. So we would have worked from 6:30 a.m. to 9 a.m. and done for the day. And made like actual decent profit. And that's like the power of trading, right? That's why I want to show this stuff off, because if you could work 2-3 hours a day on top of, like, say if you have a normal job and get, you know, your same salary a month from day trading, like, it's a huge, huge life hack. All right, I'm gonna go make that coffee that I said I was gonna do. I never say good morning. All right, let me take a quick good morning photo. Let me do a quick good morning. And then we're going to get to back testing. Just got to make my posts. All right. Okay, posted that. All right, let's check one thing. All right. All right. Back testing. That's what we're gonna do. Okay, we got about 2 hours until we have FOMC. So let's do some back testing. Let's do let's just go to like some random time. Bar replay. Close my eyes. Let's see. Okay, what day are we on? 15-minute. Okay. What time are we at? Saturday. Okay, let's get to Monday. Saturday. Sunday. Monday. Right there. Let's see. Let's do some back testing. Where are we? We're in February. Okay. Let's see. Holy smokes. Oh, is that the Donald Trump announcement thing? Yeah. All right, let's do some back testing. All right. I need one more candle. Holy smokes. That's 6:30, right? Yep. And then let's see, when's the next 6:30 candle? Tuesday. Right there. Okay. So let's do 15-minute. Let's get our orb drawings up. Orb high. That's a big orb too. Orb low. Okay. What else can we do? We can do let's do weekend highs because it's Monday. Weekend highs, and then we'll do weekend lows. Probably where's Friday, Saturday? So weekend lows are all the way down here. Yeah, weekend lows. Okay. Let's drop down to we're gonna do the more risky way. We're gonna do 1 minute. Okay. Let's see if we get a trade opportunity. Okay. Right here. What happens? Push up, break, test the orb, break, and continues the structure. I'm going to go with that. That's kind of matches the strategy. Stop loss out at this wick here. And then really, I don't even know where to target. We're just going to target 2R here because I just don't. The next low is way down there. So I'm just going to go 2R on this one. Let's see if it bounces back in or if it fails. Okay. Oh, pause. Why does it keep going? Okay, it hit. What is this? I want to see some. 1. I wonder if I should start focusing in on just like 1R on these first moves. Because it always hits 1. It doesn't always hit the 2. And let's see. I wish there is a low over here. I want to see some. Let's see if I should have paid attention to this low here. Like this one right there. Because that low pushed up to make the higher high. Let's see. What did we do? We didn't tap that low. Okay, it failed. Okay, so that's a 1 loser this day. Okay, pushing back up. Maybe we should. Oh, wait. Maybe we should have. Let me see something real fast. 15-minute. We got 1 candle, 2, 3, 4. Maybe it's better to wait for that 4th 15-minute candle. We'll see. Okay. Pushes back in. Or push in. Push in. Push in. Let's see. Push in. Retest. Push out. Breaks the structure. Technically should take this trade right here. Stop loss at the wicks up here. Shooting for now, we just shoot for this low here to the left. And then we see if we can go further. So let's see if we get that low at least. All right, we're just shooting for this low. Pause. Okay, we got the low. So stop loss is now break even. Let me change the color of that to red. Okay, stop loss is now break even. Now we're shooting for 2R. See if we get 2R. Okay, we get stopped out. Still, great trade. What do we end up getting here? Max of 1.4R, 1.43R. Okay, that's a winner. That one now outweighs this one. Let's see if we get another one. So, test of orb. Push off. No break in structure here. Okay, broke structure there. Technically, we could try to take this right here. Pushes off. Why would I be open to taking this trade? Because it tapped orb, rejected, made a lower high, broke structure. Right? So it's the break of structure. Now we're not shooting for 2R. What do we shoot for? The next low right there. See if we get the next low and then see if we can go further. Might get. Okay, we got the next low. So now what do? We shoot for 2R. Or really, we could probably go to the next low, which is 2R, but over 2R. Let's see if we get the next low. And stop loss would be at break even. Okay, another winner. That one got us 1.59R. What up, Tweak? So far, we are profitable for this day. So far, we're profitable for this day. Love how you are breaking this down. Sweet. I hope it's helpful. I hope it's super helpful. So what I think I'm learning, if you remember from the previous back test, the first breakout caused us to lose 2. So I don't think we ever enter on the first breakout. I think we wait for breakout, the retest, like a bigger 1-minute retest, and then we look for the entries. Because the last time too we did this, it also caused us to get stopped out. So I think I'm done trading when the immediately breaks in the beginning. I mean, I guess what would have it been if I entered on this candle? Let's see if that would have given us a 2R. I don't think so. Yeah, it wouldn't have. So I think it's bad to trade on the first break. That's what I'm kind of noticing. It's bad to trade on that first break because the second ones seem to be more profitable. Yep. Retest and a break of structure. That's what's important. So like here, right? The retest is important, but what matters the most is the fact that it broke back in, retested. This candle failed to break structure to the upside. This candle, we should have seen this one break this structure. It didn't, so we don't have a long. This candle pushes back in. What does this next candle do? Break structure. We have an entry now to go lower. Stop loss to this here. We probably could have put even our stop loss down to the body of a candle, giving us more profit, but stop loss to the wick. Target not 2R. Target the previous low, which we get. And then we probably could even targeted the next previous low, which is this one here, which we get that one too. But instead I said 2R, which we didn't get. But I think it's honestly better to target the liquidity, the lows, right? Target this low. We got that one. Did we get this low too? We did not get that one. So target the next low, right? So this one targeted this low. We got it, right? So we entered when it pulled back, pulled up, broke structure, enter. Target just the next low. Boom, we got that one. Get stopped out at break even. Another winner. Yes, and that's what I was messing up. So I wasn't waiting for break of structure, which kept causing me to lose. And I think I fixed my strategy where I have to wait for break of structure to enter the trade. Targeting just the low, yeah. Because I found when I targeted the 2R, we would get into profit, but it wouldn't hit the 2R. It would maybe bounce. And so I think I'm going to, instead of just shooting for 2R, going to be a little bit more better at my profit management and shoot for the lows first and still go for 2R, but keep better profit management, right? Because profit's profit. A 1.4R, that's still really good. Right here, 1.31R, that's still really good. If you risk $50, you're making like $55, $56. You risk $50 here, you're making like 60 something bucks on this trade. That's still really great. So let's see if we get another trade. Let's see if we get another one. Oh, I don't want to enter now. I would wait until an orb retest happens. All right, looks like we're about to get an orb retest. Let's see if we get something. I like that. I got caught up going for the Grand Slam at times, and I don't take the shorter term TPs. Yeah, me too. Me too. It's so hard because you're like, man, I miss out on profit, right? You think about what you're missing out on, not what you got, right? All right, so this one is different this time. Why is this one different? Okay, why is this one different? Broke structure. We don't enter yet. Okay. Retest. Continued the push up. Let's see. Do I get one more? Okay. I'm going long here. Stop loss at this candle here. Actually, I'll put it at this low here. Okay, now what are we shooting for? Which I forgot to map out. We're not shooting for the orb high. We're just shooting for the midline. Okay. And if we get more, we get more. If we don't, we don't. Okay. Now, not only did this push up, break structure here, broke structure on these ones, and broke structure on these highs here. So we're breaking structure. Now the next key one would be this one, but we don't need to wait for that because we broke all these highs. So the next good one would be here. So what could we just target? Instead of targeting all the way to the midline, what could we target? That high right there. Okay, that's first TP. Okay, first TP's there, stop loss down here. Let's see if we get it. Oh, wow. Okay, this one might stop us out. Okay, this one was a loser. That one was a loser. Still, we have 1, 2 winners, 1 loser. We could call it for the day, but because we're back testing, like in real life, I probably would have called it after these two. But because we're back testing, we're gonna take data and learn, right? We're gonna try to learn as much as we can this morning. But in real life, I probably would have been done after the second winner. You win 2, you're fine. Okay, let's see what happens here. Maybe I just entered too early. No, it looks like it's breaking down. Okay. Would that be considered a breakout trade on that long since there wasn't a retest? Yes. So, right, there was the break. This candle I would consider the retest because it tried to push down but pushed up. And then this one, again, pushed up even further. Right? And then if you look left, what did it break? This strong high, this strong high. Not this one, but it broke these highs, right? So that one I'm good because I got 3 candles confirming the momentum, but then it happened to just flip. So now, what do I wait for? We broke back outside the orb. What do I see? We have this low here. What do we do? We broke the structure here on this candle. We also have this low here. Did we break this structure too? I'm going to wait for this one to break. Let's get one more candle in here. Okay. I'm going to go short. Stop loss at this green wick. This could be a big move, actually. And then what do we target? We don't target way down here. Target this low. Not a big move, right? That's not really a ton of profit. But profit's profit, right? Let's see if we get that move. We should. Pretty quickly. Let's see. Do we go back into drawdown? Okay. Got first TP here. Where's the next one? This low down here. Okay. We got these lows down here now. Let's see if we get that one. Stop loss. We would have got stopped out here. Stop loss would have been moved here. Would have got stopped out. So still another winner. Not that one's not a big one. This day we haven't really seen any big trades like we have in the past. But that's 1, 2, 3 winners, 1 loser that day. I have a feeling this one's actually gonna. I have a feeling this trade's actually gonna be pretty huge. I think what we could have done on this trade actually to be better. To be a better trader, I think really the entry was this candle. That candle, stop loss there, targeting here, this low. I think that would have been the actual proper entry is this candle here because it broke this low here, not waiting for that one. Let's see what would have happened if we would have done a better entry or like listening to our strategy better. Let's see if that one would have played out. Right, so we hit this low. Now targeting this low. Let's see if we get it. Looks like we're going to get it. Okay, got that low. And really actually ended up getting... Yeah, that would have been the better trade. Okay. That's good to know. That's the trade to take right there, that candle. Are you mainly going to use this on the 1 minute, 5 minute, 1 minute? 1 minute time frame is what I do it. That's my riskier one. Now, my other one, if you want to be less risky, do you want me to show you the less risky option tweak? Because that's the 15 minute. So let me show you what it looks like on the 15. So let's delete these trades. Okay, so that was another winner, and probably honestly, this is probably gonna go really deep. Yeah, this is gonna go deep. That would have been our big trade of the day. Yeah, hit previous weekend high. I mean, this thing could literally go insane right now. Yeah, that would have been a massive trade for the day. Yeah, that would have been our killer trade of the day. Let's go back. Let's do some bar selects back here real fast. Okay, let's delete these drawings. Let me show you the less crazier option, okay? Because I'm trading on the 1 minute. Let me show you the less crazy option. Okay, let's go to the 15. Okay, this is the less crazy option. You wait for the first 4 15-minute candles, okay? So look at that big one in the beginning. Okay, you don't enter on this trade. You give it 4 candles. So 1, 2, 3, 4. Boom. That's your entry right there. Stop loss for me. Enter on this 15-minute candle because not only did you retest, you retested, you pushed, and then broke the structure of these 15-minute candles, the bodies and the wicks. Stop loss goes up to the, I'd put it here on this candle to be on my less riskier option, right? I'm putting it at this wick over here. Targeting, let's see real fast. What's this? 1.71. So if I look left, where's my next low is down there. Let's see if we get it. I mean, we know we got it because we got a freaking massive trade, right? So let's see. Do we get that? Boom. Got the low. So what's next? We could either target 2. So next I'm targeting 2R. We got that one too, almost immediately. So where's stop loss? Stop loss is still at break even for me. Stop loss is at break even. Now let's shoot. We hit 2R. Now we go 3R. Let's see if we get 3. So this is your less risky option. Okay. Let's see if we get 3R. Oh my gosh, we got 3R. So now stop loss is at 1R. Let's go 4R. Love this. Looking for orb indicator. No orb. There's no indicator. I mean, I think there actually is an indicator, but you don't need an indicator. I just draw lines. I don't even use an indicator. I have 0 indicators on the chart right now. Okay. There's not a single indicator on the chart right now. Let's see if we get 4R. It might not. It might come up and stop us out. Oh my gosh. There we go. 4R. What do we get here? Is this like 5R? Almost 5R. Okay. So stop loss is now. We hit 4R. So stop loss is now at 2R. Let's go 2. I mean, even if you take the less risky route, you're still getting a massive trade for the day. I mean, 4R is a huge trade. That's a big trade for a day. Let's see if we hit 5R. Okay. Or if we get stopped out. What are we hitting? Do you see what we're hitting right now? Do you see what we're sweeping? The previous weekend lows. How are you finding orb then? Any good videos to learn? Okay, orb is an acronym. Okay. Opening range breakout. So what's the opening range? First 15 minutes of market open of New York session. Okay, tweak. So first 15 minutes of New York session open is what you're looking for. And you just mark out your lines of the first 15-minute candle of the New York session open. New York session open is 9:30 a.m. EDT. Okay, EDT is the time zone. Yeah, man, of course. I'm honestly doing this for me to also give myself some confidence into trades. So let's see if we hit 5R now, or if we get stopped out. If we reject off this low here, and we push down, we could go very low now. Well, actually, okay, so here's the issue we're coming into now is now we're at the next day open. Beautiful. Simple enough. That's my strategy, KSS strategy. The keep it stupid simple strategy, because I'm an idiot. If I can do it, you can do it. KSS, keep it stupid simple. Let me go get my coffee real fast. They say teaching it makes you retain such refined things. Yeah. Yeah, exactly. Exactly. So honestly, at this point, what time is this candle hit? Right around here. That's 6 p.m. Monday. I'm done with this trade by here. 6 p.m. on Monday, this trade's done. I'm not holding it throughout the night. I'm closing this thing out. So we got 4.95R on this trade. Great trade if you're taking the less risky route, right? Now, if we go back, let's delete this real fast and go back to the 1 minute. Okay. Let's see what it would have been on the 1 minute. And that's why I use the 1 minute, because you get way bigger R. Right? So 1 minute. Remember, what did we do? We saw it retest, push out, and then we have this low here. This low here. And this candle's the one we enter on. Okay? So short. Enter on this candle. Let me fix that. Stop loss to the wick of this candle here. First TP at this low, right? Yep, 1.42R. Okay, so we're not getting greedy. Okay. We don't get greedy. And obviously it hit, right? Let's I guess we'll just leave it. We know it's there. We'll see. So I'll walk you through my TPs, right? So first one hit here. That's 1.42R. Stop loss goes to break even. Okay. Then we shoot and we almost get stopped out. That would have sucked. That would have sucked if you got stopped out there, because after what it did, right? Then we shoot for 2R, or really this low. This low here. That's 2.27. Stop loss still at break even. Stop loss doesn't move until we hit 3R. Okay, so now we hit this low, right? We hit this low, but then it moves really quickly. So we hit 3R. I mean, let's see what this trade would have ended up hitting. I don't even think it would have ever stopped us out, because it doesn't ever give a pullback until down here. So we would have hit at this pullback down here. That's 14.8R. 14.8R until you actually start seeing some pullbacks. So at 14.8R, we are at a 12R for stop loss. So let's put our stop loss at 12R and see if we get stopped out there. We do. Dang, that's a bummer. That's a huge bummer. That's still a crazy trade, but we do end up getting stopped out there. So this trade for us would have hit 14.8R. So if we're risking $50, now we're not making $50 times 14.8, because we would have taken profit at this low, at 2R, and then so on and so forth as it's moving down. So we're not making that, but we're making a lot of money on this trade. Okay, this trade made us a lot of money. Okay, and we also, remember, we had 2 other trades over here that we took. That's why I trade on the 1 minute. So far, the success rate with backtesting the fixed strategy has been, every single day has been a winner so far. We haven't backtested very far yet, but every single day is a winner. So it's like, I don't know the win rate percentage, but it's been pretty good. I've been using the strategy for a while, but I wasn't waiting for the break of structure. So as I told you earlier, like, I have to wait for the break of structure before. What I would do is just wait for like this candle here, this break back down, or see this one here, right? See this one here. I would have saw this retest and push. I would have saw that, entered here, stop loss here, and I would have eventually gotten stopped out, or probably even stop loss like here at these lows, right? I would have gotten stopped out, right? In my old way, I would literally like see this. I would have entered on this 1 minute candle. 1 minute candle, stop loss all the way back at this wick. And I would have only taken profit at 2R, which we would not have hit, right? And I would have waited. We would have got stopped out, a losing trade. Then I would have waited again. Enter on this trade, stop loss up here. This actually would have eventually been a winner, eventually. But Actually, that would have been a freaking killer trade too. I would have actually entered here, break of structure, break out of orb, stop loss up at the top here. I mean, if we would have held this one too, I mean, that one would have been freaking killer too. But I wasn't waiting for break of structure, which was getting me caught and getting me stopped out. And so now I'm waiting for break of structure, and I'm hoping, that's why I'm doing this backtesting right now, so we can check the strategy and see how it works. But I've been on a losing streak lately, and I'm doing the $500 to $1 million challenge. And yesterday was the first time we made it all the way up to like $800 in profit. But yesterday was the first time the account went to negative. So we're at $464 in profit now. So I've been on a losing streak, and today, tomorrow, Friday, Saturday, Sunday, I'm not testing, or I'm not trading. I'm only back testing to make sure I really did fix the strategy. So these next 3 days on the live streams will be strictly testing the strategy to see if I really did fix it. And then Saturday, Sunday will be me doing a lot of back testing. So tomorrow on stream, we'll be checking to see if the strategy did work on live. Like, we'll be taking mock trades like this, but in the live market. Thursday, Friday, and then Saturday, Sunday, I'll be doing back testing to see if I really did fix the strategy. And then hopefully Monday we get killer trades like this. Killer trades like this guy over here. Yeah. So Tweak, I do my copy trading for the 501 mil, and I do those trades on the 1 minute time frame. But on the other one, the WEEX copy trading, I do it on the 15 minutes, so it's a little less risky, or like a little less risky. What time do I stream usually? 6:30 a.m. Pacific Standard Time, or PDT, Pacific Daylight Time, or whatever. PDT is right now my time zone. But today I started later because we're doing FOMC today at 11:30. But usually I'm up at 6:30 a.m. is when the stream starts. If you want to stay in the know, Tweak, you should join the Discord. That'd be a great spot for you. That's where I'll put like the upcoming streams, the times we go live. I even put my analysis. I put a bunch of things in there, and we're slowly growing, and also growing in the things that we're adding to the Discord. Dope. I'm Pacific time too. Oh, sick. So I'm up at market open, so it's early. It's bright and early. All right, I gotta help a client real fast. Let me do something real fast. What do we want to title it again? I just gotta schedule something. Yeah, I'll jump in there. Let me just do something real quick. Schedule for Thursday. Do you count wicks as break of structure or candle close? Candle close. It has to be candle close. Cannot be wick. So like this one, right? This candle here. Let's zoom way in. This candle technically with wick broke, right? That green one right there broke structure, but it wicked, not candle closure. So really, this could have been the entry. This candle here actually could have been the entry too, because it broke and closed below structure, right? Push, green candle, then another big push and break of structure too. So really, we technically could have entered here. It hit our criteria, and that makes it an even massive, a 28.24R, right? So that's even a bigger trade. So, yeah. Set this out. What's our guest list again? Sorry, I just got to make this post real fast. Sweet. Got to make this post. Hold up. Oh, we got a good list tomorrow. Holy smokes, we're stacked tomorrow. Yeah. Holy crap, that's really stacked. 1, 2, 3, 4, 5, 6, 7, 8. 1, 2. 9 people? Dang, we're gonna have a good space tomorrow. We're gonna have a really good space tomorrow. Can't be tired. Okay.
yet?
Sweet. Looking forward to seeing how the back testing goes. Would love to have a scalping strategy. I'm pretty new, so I typically have been sticking to 4-hour and major support and resistance retests. In the beginning of your trading strategy, in the beginning of your trading journey, higher time frames will be very helpful for you. It's really hard going down the lower time frames because it moves very quickly. So higher time frames will help. Like say like 15-minute, I would say for you, honestly, don't go lower than the 15 if you're going to try to do a scalping strategy. Like do what I showed you, but on the 15-minute time frame because it moves way slower. Yeah, he wants to do it in 5 minutes. Okay, let's set a timer. All right, once I'm done doing this post and stuff, we'll do some more back testing because we got about an hour until FOMC. We'll do like an hour more. And then we'll go down the 1 minute on Bitcoin and then watch it too why the FOMC is happening and see how crazy it goes. All right. I think I got some. Okay. Let's go to the next day. So let's go to the 15-minute time frame. What am I? Oh, please. Okay, perfect. Now we're at the next day. So now it's Tuesday. Let's get our 6:30 candle. We need one more. Okay. Let's not delete it. Let's get it to the next day. Wednesday at 6:30. And then I'm going to mark out 6 p.m. at the end of the day. So every trade will be done by that yellow line. Okay, so my trades will never... Let me change the color. So this is end of day. This is beginning of day. So all of our trades, if we have trades, will be done by orange line, okay? Oh, let me do this. Let me grab our orb. So orb low. Okay. Orb high. And then also we need to map out Monday. Monday's highs and lows. So Monday, where's Monday start? So Monday high. Okay. And then Monday low was down here, right? This should be Tuesday. Yeah. So Monday's low is there. Swept Monday's low. My guess is we're heading to the upside. What is this? Oh, this is okay. So let's also mark out some highs on the 15-minute to pay attention to. So we're gonna map out this guy, and then we'll map out this guy, and these will be. Let's make them pink. Let's make them a little lighter so they don't look like red. Yeah, we'll make them pink. Like that. Or should we make them purple? Yeah, we'll make them purple. I just want them to pop a little bit. Okay. All right, so we know those are highs to target if we break out. Exactly, yeah. Yeah, don't go down to the 1 minute yet, Tweak. If you're just starting, do not go to the 1 minute, okay? You'll honestly lose more money than, even if you have a good strategy, in the beginning, you'll probably lose more money than make because you won't be used to the speed. So I want you first to get comfortable in a higher time frame, like a 15 or even maybe like an hour, right? And maybe you're not trading the orb. Maybe you're just trading like structure, right? You wait for those breaks of structure and wait for things like that on a higher time frame. But if you're going to try to trade the orb, don't go to a 1 minute yet. You're not there yet. Don't do that yet. Wait on the higher time frames. Okay, so 15 minute. We got that 15 minute orb breakout ready. And oh wait, I forgot to do something too. What is this red line? Okay, let's get this red line out of the way so it doesn't confuse us. We also want to map out, just so we're prepared. I want to map out the orb. Okay, I want to map out the orb 50 mark. We haven't used it yet, but I will explain eventually what that means when we go to use it, okay? If we do have to use it. All right, now let's jump down to the 1 minute. And remember what I said last time, yesterday, or yesterday's back test? Don't trade the first breakout, okay? I'm not going to do that this time. I'm not going to trade the first breakout. I'm going to wait for like the second retest. Okay. We got a breakout. We're not trading yet. Well, actually, what time is it? It's 7:30. Let me see the 15-minute time frame real fast. All right, we can post it. Post all. There we go. Okay, that's done. Go back here real quick. All right. Oh, he already did it. Okay. All right. Back to back testing. Let me just put up this chat just in case he reaches out to me. Look at the 15 minute. Okay, so look at the 1 minute, right? We got the breakout, but if we like try to like, let's see what the 15 minute looks like, right? 15 minute does not look good. What honestly I'm seeing here, let's see if we got a break of structure. So we have a push down, push up. What are we outside of the orb? We have push, 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 lower low, or higher low, break of structure. What can we do? Okay. Trade, I'm gonna go to this low here, right outside the orb. And then what am I shooting for? I'm not shooting for middle line yet. Let's shoot for previous high and then middle line. So that's what, a 1R? Let's see if we get that. We might not get it. Looks like we might. Actually, we might. Oh, so close. It didn't hit it. It didn't hit it. It got close. Maybe I tapped. Maybe I should have went for this high. Right, this high here. I went too far up. This is. Oh yeah, this high didn't even break up. Why did I do that high? Didn't even break a low. This would have been the high, and this would have been the high. My bad. I messed that one up. So I would have messed. That would have been a mistake on my part. But boom, we would have, I would have made a mistake. I think we would have gotten stopped out too because of my mistake. Because I'm waiting for this high instead of these. Let's see if we get that high eventually. I should have targeted a lower high. Yeah, I think that I would have messed this up. We still haven't gotten stopped out though. It's just choppy. Still haven't gotten stopped out. Wait, you see what I'm noticing here? See what I'm noticing here? What do we do? Oh wait, no, that orb was down here. Never mind, sorry. Orb is down there. We haven't done it yet. We haven't done it yet. Okay, so eventually would have. I thought this was the orb. What is this blue line again? Previous day low. Okay, so there we go. I guess we would have eventually hit this TP. We would have almost gotten stopped out very close, but we eventually got the TP. Okay, got that TP. Stop loss is now here. Okay, big orb retest, breakout and retest. Yeah, I don't know why I thought this blue line for a second was the orb. It's not the orb. The orb is down there. The orb low is down there. So we never got the orb break. But we almost got stopped out there. But look what it did again at the orb low. It bounced off, pushed up, hit our previous high here. Then what did it do next? We hit our second TP, which is the middle line of the orb. And now the way that the orb is doing this, I can target all the way up to the orb high. So next TP, I'll probably do like this low to left here or high to left. I think we're going to get that. Let's see. But I think honestly, we can target all the way to this high. Or the orb high. Let's see if we can. I think we hit orb high. Yep. Okay, we got all the way to orb high. And that is 3.58R. So this trade is a winner. Right? So, and now we're breaking out of orb. And we're still in a trade. Right? We're still in a trade. You know what we could do? Made you sweat. Yes, it did. You know what we could do? Is add to our position. So we take profit all throughout up here. Right? We can add to our position now. Up here. So what can we look for? We have a push up, and a push up. 3. Let's see if we get a retest. We probably won't. Let's see if we get a break of structure here. Okay. Nope. Let's see. Not a break of structure yet. Not a break of structure yet. Boom. So what you can do here. Okay. We're already in a trade. This trade is not closed. Okay. But what we can do now is add to this position. We just got another confirmation. So what can we do? We can add to our position. And the cool thing is our entry wouldn't even be up here. Our entry would be like probably middle line of orb. Okay. Now what can we target next? We have this high up here. We have this 15-minute high up here. We have this blue line, which what is the blue line again? What is that blue line? I think I need to delete this line. So we have purple line and then we have previous day high. We could have potentially right now a huge trade. And we can add to it because we've gotten confirmation. Not only has a broken structure to the left, all these. Now we're going to the 15-minute high, right? That's why we mapped out those highs. So say we add to our position again, right? And say like, honestly, it'd probably look like, say we add to the position, say entries here because we added and we entered on that one. Stop loss is probably at original entry now. So we're going to say stop loss is there. That's not really, it's hard to do it as you can, whatever. The key point is I would have entered more into my position. And so we're at 3.58R. Let's put this down to 1R. Where's 1R? So stop loss is here right now. Okay. Or actually, what are we at in the highest point? We are at, okay, 4. So we're at actually 2R, sorry. So stop loss is here. We're at 4R. But honestly, my next target is this purple line at this point. I think we hit that. That would be, if we hit purple line, we're at 6.16R. Let's see if we get it. I think we're going to get it. Let me zoom out a little bit just so we can see it. I think we're going to get it. Boom. Okay, purple line's tapped. Okay, what are we at now? 6.58R, so stop loss is at 4R. 4R now. Let's see, where's that? Stop loss is here now. So we haven't tapped it yet because we're over here. So we haven't tapped it yet. And then where's our next target? That's our next target. Let's see if we get it. And look at, we still have a long way to go to the end of day. Let's see if we get it. I think we should get that next 15-minute high. Oh, maybe not. Looks like it might be breaking. Okay, so we probably would have gotten stopped out there. What is this high? So this big correction probably would have stopped us out. So we hit, this high is what? 9.52R. So our stop loss would have been at 7R. Yep, we would have gotten stopped out. So stop loss would have been right there. We would have hit all the way up to a 9R and stopped out there. I mean, that's a freaking killer trade. That's a killer trade. And we only had to take one trade that day. We got really scared over here. But that was a killer trade. And I'm done. After this trade, I'm done for the day. I'm not even going to look at any more trades. Because one, we'd have to, in order for me to trade, I would have to be back at the orb. And I don't even know if we'll go back to the orb. Let's see. Do we go back? Let me go to a higher time frame. We're at 15. I wouldn't be surprised if we hit the purple line, though, by end of day. Yeah, we're going to hit the purple line. Let's see. Do we? Actually, we might not. Or before the next session open. Oh my gosh, we hit it. We could have literally gone to bed, set a take profit up there, and we would have hit a 12.76R. That's crazy. That's crazy. That's a good trade. Okay, that's a winning day. We're about to get to the next market open. What time is it? 10:30. Let's get to the 6:30 market open. All right, so we're at the market open. What do we got to do? Let's first mark out previous day lows, previous day low here, and then previous day high, which we've yet to sweep this high or this one. So I'm going to leave those there. But previous day high was here. And then we have this high. Now we've swept this one. Let's mark out some strong lows on the 15-minute. So I'd say that's a low to watch out for. And then you have that low to watch out for. You have this low to look out for. And then you also have this low to look out for. Okay. Then we have this high, that high, and even that high up there. So we'll mark out those two. All right. Let's get the orb. Okay. Orb is set. Let's get the middle line. Middle line is oh, come on. That's ridiculous. Right there. Delete that fib. All right. Okay. And then let's mark out market close with the orange line. 1800 hours for me. And then we'll mark out the next market open. This back testing is getting me excited. Okay. Oh wait, what? This is the orb. Good thing I moved that line. I would have missed that, right? That's 630. Let me fix that. Let me fix this one too. Okay, I almost messed that up. Okay. 50% line. Okay, delete the fib. Okay. Are we sweeping the highs? Okay. Important note to make that we've hit these highs, previous day highs. So we either look with this candle, looks like it might support these highs, which would mean we target these liquidity. But if we push down, we target this liquidity down here. So let's see. Either way, we have good liquidity to target. So let's go down to the 1 minute. Let's wait. Okay, those are, let's check the 15-minute. So this is like kind of ranging right now. Let's check the 15 real fast, because I wouldn't have taken this 1 minute trade, because why would I have taken this? The break of structure happened. Well, it didn't even break structure, but all the way up here. I'm not taking that. Same for this trade. Why am I not taking this trade? Because the break of structure never happened. The break of structure would have been down here, and I don't take trades at the middle line. So I haven't seen a trade yet. Let's go to the 15. Let's see what the 15-minute candles look like. Okay. Weird looking candles. No break of structure. Okay, break of structure there. I'm not entering yet. Okay. Not entering yet. Not entering yet. Nope. Okay, that's the entry signal. Why is that entry signal? Breakout, push in, rejection, retest. Not only did it reject the orb, but this candle broke structure. Short, stop loss up here. Honestly, the next low is not until, what is that red line? Oh, I keep forgetting to delete these. We'll use it. I keep forgetting to delete those. So really our next target is not until the purple line. So let's see if this trade is a winner or not. I mean, I'm not shooting for that. I'm going to go for 2R first, because I don't really have the next 15-minute point of interest is not until that purple line. So I'm just going to go 2R for right now on this trade. Let's get it pushed out a little and let's see what happens here. All right, we get stopped out. Okay, that's a losing trade. What happened though? Okay, we get stopped out on this candle. Okay, pushed down, should have fell, but it didn't. It pushed back in, stopped us out, but then what does it do? It retests orb, breaks structure. So in 1 minute we get stopped out, in the next 2 minutes we get the next entry. So we take it because that's what the strategy is telling us. What do we target? We don't target middle line. We target the high to the left. So this guy right here, that high to the left, that's the next nearest. Yep. Let me see if he's texting me. Okay, let's see if we get the first TP. Huh. Are we about to range back down? Are we going to get stopped out? So the strategy, right? The strategy isn't going to be perfect every time. Ooh, that's not a good candle. Let's see. Do we get it? Did we get the minimum of the other high? Okay, we got stopped out. So this day is not... Honestly, real life, I'm done for this day. Real life, I'm done on this day. I've lost 2 in a row. But for back testing sake, we're gonna keep going. Okay. What do I see here now? Which is kind of frustrating. What do I see here now? Push in, push down, higher low, push down, retest the orb, another retest and a rejection, breaking structure. I need one more good candle, push down. I need just one more. Let's see what the next candle gives us. Okay, I need a good push. I don't need that. Are we gonna go long? What is it doing here? Okay, still hasn't broken structure for a long. Did that break structure? That's too small. If I have to like really look for the break of structure, I'm not doing it. Okay, it's still choppy. Still no break of the orb. Do we break structure? Okay, breaking out. Do we break structure? Let's see. Technically that broke structure. I'm gonna wait for one more. I want a good push. Okay, that one. Enter, stop loss up here at these candles. I'm shooting first for this low here. Okay. And then let's see if we get more. So stop loss right now is at that low. Let's see. Could retest orb and then push. So do we get it? Let me just press play. Okay. We got TP1. Okay. Now the net, what do we get here? 1.46. So next target. So stop loss is now at break even. Okay. Stop loss is at break even, but our next target is technically not this until this purple line. The fact that we just broke down, this should happen quickly. Let's see if we get it or if we get stopped out. Okay, we got stopped out, but let's see if we still get it. Oh, it didn't go to the purple line. All right, well, we did get a winning trade here. It hit, what is this? 1.46 and then got stopped out. Okay, what do we see here? Well, it looks like we're getting another trade opportunity. You got break of structure into orb. You got retest, break. And this one broke structure over here to the left. So you get a long opportunity on this candle. Stop loss. Stop loss I'm putting at that candle right there. We're shooting for, is there a high? Really the next, honestly it's middle line. Because where we are currently, we're already at these highs. So the next target would be middle line. Let's see if we get middle line. And this could be a big move, right? Just like yesterday. Okay. Okay, we got middle line. Let's see if we push. Push the orb high now. So next target now is orb high. Stop loss is at break even. Or actually, let's see. What are we at? Yep, stop loss is at break even. Now we shoot for orb high. Okay. Okay, dude, we might get a big trade here. Another one. All right, so take profit at orb high. What do I see? Break of orb, retest, retest, push off. What do I need to see? I need to see one more candle, and we can add to our position again. Okay, there we go. I can add to my position now after I've already taken 1, 2 take profits. Stop loss is now at 2R. So we're at 4.73. Let's put our stop loss to 2R. Okay, and then where is technically the next target is the purple line up here. We should hit the purple line. Okay, we probably got stopped out. What did this hit? 5.93 R. So we didn't hit 6, so we're at 3 R. I think we got stopped out. Yeah, we did. So we would have gotten stopped out on this push down, but it's still a killer trade. That's still a super good trade, right? We would have taken profit at the 5R because that's another 2R from here. Taking the profit there. Yeah, great trade. I think we still probably go here though. I mean, actually, technically we had another trade opportunity. Technically, your next trade opportunity would have been this candle right here. Right? This candle right here. We shoot for this low to the left. You could have gone to that low right there. You would have gotten that one almost immediately. Then your next TP would have been middle line. Let's see if we get middle line here on the break back in. I have a feeling it's going to break back out though. Yeah. I mean, you would have already had stopped out because the break even point. Because we would have had it here. We would have hit this low and stop loss would have been at break even. So we would have had another winning trade. You could have even taken that quick trade. And now it looks like you're going to get another long opportunity on this candle right here. What's happening? Pushes back out, push out, retest. Oop. So this trade would have been done on this candle right here. Here, I actually wouldn't have taken this. This is unrealistic. We would have gotten stopped out on this current trade. So we would have gotten stopped out on that candle right there. But still, we get an amazing trade. And let's put this on here. Okay. So now we get another opportunity. Break, retest, push, and break of structure. So long. Stop loss. I'm putting the stop loss right at this red candle here. First TP will be at the high here. Let's see if we get the high. Oh, we might get stopped out. Okay, failed. We're just going to keep taking the practice trades. So that one failed, even though it broke structure, failed, broke back in. This candle You technically have a trade here now. Why do you have a trade here? Push in. This candle broke structure back into the orb. I wouldn't trade like this in real life, but I'm just doing the back testing and seeing how each trade works. So this one, we target this low here. I don't like that. I'd probably target the wick. Let's see if we get the wick. Oh, is he going to be choppy on us? I think we're going to get the wick. Ooh, failed. Let's see. Do we break structure to the upside here? Nope. I would that trade's done. As soon as I see that green candle break structure, I'm done. But we'll see. We're probably going to get stopped out because I think we're going to get another trade opportunity now to the other side. Oh my gosh. Good thing I didn't close it. TP hit. Where do we target next? Middle line. Probably going to hit that too. Hit middle line. Where can we target next? Orb low. Did we get orb low? Stop loss is now at, let's see, where is this? We're still not at 2R. So stop loss is at break even right now for this trade. I think we're gonna get stopped out. Let's see. Or do we push? If we push, we're going to orb. Let's see, push. Don't break structure. Yeah, there you go. Break structure to the downside. Did we get stopped out or what? Okay, that trade's done. So that trade would have been a max 1.9R. Seems accurate if you stick to it fully. Yeah. That's why I do the back testing. So then when we get to real life, we know just execute, right? You look for that break of structure, you look for the retest, and then all you do in your mind is just execute. You don't think about it. You just execute, right? So that's why I like to do back testing. And so when I go to the charts, I can see it, I can visualize it, and I just execute. Let's see what happens here. Do we get another short? Or do we get a long opportunity? Okay, retest, push out. Let's see if we get a retest and a push. Okay. Breaking structure to the upside. That is a trade opportunity. Stop loss here at this low. What can you target? I'm targeting minimum these highs first. So you're gonna fail again on us? Oh, okay. Longs are not working on this. Longs are not working at all on this side. You technically get another short opportunity. I don't like doing the back testing like this because I would have been done by this trade today on that day. But for back testing sake, let's see what this one does. Does this one give us a winner? Right here, break a structure to the downside, stop loss up at this low or high. I mean, sorry. First TP honestly is just middle line here. Okay, that one failed too. And that one technically broke structure. So you technically get this long here. This is kind of hectic right now, but I don't love it. But let's see. You're targeting this high again. Let's see. Can we finally get a break up? Yeah, you get stopped out. Okay, this is not realistic trading. I would have been done by this trade on that day. But now it just looks like it's not playing out on, like, as you're getting too greedy on the day, right? Usually you stop once you win. Do you expect FOMC to be bearish? Noticing USDT sitting on 4-hour support. I think yeah, I think FOMC should be bearish today. I think that's why we saw the bullish moves, which FOMC is about 45 minutes out. But yeah, I think my guess is it's bearish. Let's go to instead of keep taking these stupid trades that are unrealistic. Let's go back to doing it like a real thing, and let's go to the next day. Okay, let's do one more back test, and then we're going to start focusing on FOMC. Okay, one more back test, and we'll focus on FOMC. Let's see what the day does, though. There you go. That's the move you're waiting for. Oh no, it came back in again. Oh my gosh, it's finally going to go to the purple line, but let's see something on the 15-minute too real fast on that day's orb. 1, 2, 3, 4. Broke back in, pushed. Yeah, this one would have faked you out and got you stuck. But if you would have never taken that next trade, you would have missed out on all that. So okay, let's get to the next day. Yeah, tap that purple line. Oh, and when, oh my gosh, would have been a crazy day. Okay. All right. One more, and we got orb. Okay, we got orb. Let's put this to the end of day. 1800 hours. Let's go to 6:30. Technically, I think it's even earlier than that. Like, what is this? Technically, I think the New York session ends at like 3 p.m. my time. So really, it should be like 1500 hours, I think. But I'll put at 1800 because that's like end of my night. Orb. Let's get the orb marked out. Okay. Let's get orb low marked out. All right. Okay, let's get orb 50% line marked out. This blue line. Okay, let's delete that. Delete this red line so it doesn't confuse us. Let's mark out previous day high low. So we're on a Thursday, so we need the Wednesday's high low. Low there, and then Wednesday's high. So we still have yet to sweep this high up here, but this looks like Wednesday's high. Yep. And then we can delete this purple line, or not delete it, but move it, because that high is irrelevant now. This is now the relevant high for us. And then we have that high up there. And we have this low that we're already paying attention to. We have this low down there, this low, and then these lows down here that have yet to be tapped. Okay, 50% line. All right. Okay, now we execute. Let's see how this day goes. So Tuesday was a winner. Tuesday was a winner. Let's see if Thursday is a winner too. No break. Okay. All right. Wow. That's a pretty good move. Let's see. Broke all this structure. Let me delete some of these bars real fast because I want to delete up to this guy. I want to see something. So it breaks here. I want to see the 15-minute time frame. Okay. Let's go back to the 1 minute. Okay. We get this next candle, or actually technically that is the candle. So this is our candle, right? We got the break, we got a retest, a break, and then a push, a break of structure. So this is where our stop loss goes. We're targeting the next 15-minute high, purple line. Let's see if we get that. Oh, no way. We just missed it. We just missed it. Let's see if we get it. Come on. All right, there we go. We got that. So stop loss is now I forgot to add the stop loss. Stop loss is now at break even. Okay. And then where can we target next? I mean, realistically, the next target is that blue line up there. But let's see if we get stopped out. So far we have a winner. So far this winner gave us 1R. Okay. Let's see if we can get the blue line. Okay, stopped out. Trade's done. Still a winner though. So this is our trade. Boom. We still got ourselves a winner though. Great trade. Let's see what we get next. Okay, we tapped into the orb. Oh, that's a good one. Okay, we tap into the orb. We push in. Massive push out with a bearish engulfing. I'm going short here. Stop loss at the green line. I'm targeting probably this low first. And then going to target middle line. That low and then middle. Oh my gosh, that almost stopped us out. Oh, wow. I wonder if this is a news day or something. Okay, that trade failed. That's kind of weird. I have a feeling this is a news day. So this trade failed. That's a little funky though. I think we're... Let's see, did we get another opportunity? Not yet. I need this low broken or this high broken to the upside. Not broken yet. Still not broken. Still not broken. Still not broken. Okay. Push. Breaks the orb. I'm not entering yet. Not entering yet. Not entering yet. Not entering yet. Okay, still hasn't broken structure. Still has not broken structure. Okay, there we go. That's the entry. Stop loss here. We target first middle line. Who's calling me? I don't know who's calling me. All right, let's see if we hit middle line. Okay, middle line's tapped in. And then next goal is orb low. Let's see if we get orb low. And if we get orb low, this could be a big move. Okay, this could be a big move today. Next target. The next target for us to the downside is the blue line. Let's see if we get blue line. Or actually, let's see if we... Where's our... Let me make sure we don't get stopped out. 3.58R, so we're at 1R in stop loss. Let's just make sure we're watching and so next one is down here. We should hit or below is my guess. I mean, we've seen it time and time again, right? Let's see if we get stopped out because this is kind of consolidating. Let's see what is this? 4.77. So stop loss is now at 2R. Stop loss is now here. Let's see if we get that orb low or not. Come on, hit the orb low. You know you want it. Oh, there you go. It's breaking structure. Yeah, I think we're going to get orb low. Yep, broke structure again. Broke structure again. Broke structure again. Oh my gosh. I think we probably get stopped out. What is this R? That is 5R. So stop loss is now at yep, we get stopped out. So stop loss is here now. And we get stopped out on this candle. So still, that's a killer trade. We didn't get the orb low like we wanted. But still, that's a winner. And this was a winner up here. So this day, we had two winners. Two winners for on our side. Or actually, no, sorry. Two winners and a loser. And a loser. So two winners and a loser. Still, winning day. And I'm done trading for that day. So let's move on to the next. Actually, let's move on to FOMC now. It was me, dude. Pick it up. It was me, dude. Pick up. If it actually was you, dude, I'd be like, how'd you get my number? That'd be funny. All right, let's shift our focus to FOMC. I think this backtesting has showed us we have a winning strategy. We just got to execute, right? We got a winning strategy. Now let's execute. So let's get to out of the bar replay. And let's get over to trading session, leave. Oh my gosh. Oh my gosh. Look at that candle right now. Look at that Ethereum candle. Holy crap. This is why you don't trade near red folder news. No one could have predicted that. So this Ethereum trade would have been killer. And this Bitcoin trade also would have been killer. So those are winners today. So I'm definitely not trading in this. Let's see something real quick. Actually, I want to do, let's just look at Bitcoin. And we're going to go down to the 1 minute time frame. We're going to erase our drawings. And let me go up to a higher time frame actually, so I can find where we are. Okay. Okay, let's go on the 1 minute time frame now. And then we're gonna this one off to this side. Okay. This one off to this side. And we're gonna watch. So let's see. Let me refresh. We should have one coming up. Yep. Live press conference coming up. Okay, let me turn off the music. All right, just ads. So just ads are rolling right now.
Are all free for educators to use in their lesson plans, or as they see fit. Many of the Federal Reserve System's regional reserve banks, located in 12 districts across the nation.
We're gonna mute the audio for now until it's rates unchanged announced on X. Let's see. Best spot to look is Forex Factory. Yep, rates are flat, so nothing changed. It's not bullish, it's not bearish. Next is the conference. And honestly, the conference is more important than the freaking rates exchange. The conference is freaking crazy. That's when you see a lot of stuff going crazy. Okay. And as soon as he goes, good evening, it's going to, or like pump or rip or whatever. Let me heat up my coffee because I haven't drinking it at all. How you doing over there, Jacob?
Good.
Yeah.
I'm like,
Do you need anything from me?
no, I think just the AI script whenever.
Do you not have it? I didn't share it with you?
You finish it?
Yeah.
Finish it.
Yeah. You should have it.
When did you finish it?
Last week?
Oh yeah, I don't have it. Need the script and then.
All right, let me share that with you right now.
On my like.
Yeah, you can like duplicate it if you want.
To do my part of it.
Yeah, if I were you, I'd just duplicate it.
Right. And then I set up for the episode 2. I edit the clips like most of the like I have it planned
Okay.
for the next episode.
All right, just shared it with you. It's diving. Dump is coming. If you guys can, like the stream, share it, show some love as we're getting ready to watch the press conference. See if we can get some more people on here. Holy crap. Our thing's getting a ton of love. Dude, our space tomorrow is going to be freaking lit. Let me do this real fast. Holy smokes, our things are getting blown up right now. Oh, yeah, cancel. Get these real fast. Wait, looks like we got some people coming in. Dude, oh my gosh. This post is blowing up. Our spaces announcement for tomorrow. Yeah, it's performing really well. Okay. Look at that volatility. Okay, let me turn up the desktop audio for y'all. And now we're just waiting. Is there music going on? Okay. I might actually turn it down a little bit until he starts speaking, so you guys can hear me chat. Yeah, I'm gonna turn it down until he starts speaking. I didn't realize there's music going on in the background. So we got 20 minutes to FOMC. Let's hope. Last time we watched FOMC, we got 2.6 thousand people live. So let's see if we can get a couple thousand people again. Let's see if we can get a couple thousand people in here. We're already at 120 people in here. Let's see if we can 10x our viewership. If you're watching right now on X, I recommend hopping over on Twitch. Twitch is a way better streaming experience. Link is in my bio on X, or honestly, it's actually below the live stream. So if you're watching the live stream right now on X, just go below the live stream. There's a post under there that has my Twitch, quick Twitch link. Go to that and come join us on Twitch and give us a follow. I'm trying to get our followership up on Twitch. We've been growing pretty rapidly lately. We're almost to affiliate. We need 0.7 more viewers and we get affiliate. So if you want to help us get Twitch affiliate, hop on over today. Maybe we can finally get out of that and get into the Twitch affiliate. Shout out to all my Twitch and YouTube homies that are watching from those live streams and helping me get to higher levels on those platforms. I appreciate you guys. Okay, I want everyone that's watching right now. There's 140 of you right now. Put in your prediction. Do we dump or do we pump in this FOMC? I want to see. What's your guys' prediction? Put dump or pump in the chat of what do you think is going to happen. Do we dump or pump? You got 20 minutes to put it in. Oh, I can make a poll? Let me do that. Let me see if I can. I think only affiliates can. But let me try. I'm going to try to do it right now on Twitch. I honestly, that would be my first time ever making one, so it might not be very good, but let's see if I can do it. How do I create a poll? How do I create a poll? How do I create a poll? Let's see. Viewer rewards? No. Streaming tools? Let me see if I can figure it out before in the next 15 minutes. How to create a Twitch poll. Oh, here we go. Oh, that's easy. Okay, so I go channel, back to Twitch. I go, oh, stop talking. Channel, chat, and then / poll. Oh, I can't do it. Why can't I do it? Ah, I can't do one. Okay, can't do it that way. Oh, okay, here we go. So, a little plus sign. Where's the little plus sign? Plus sign. Huh. I don't think I have it. Could be an affiliate thing. I think it's affiliate only thing. How do I find that? Maybe there's a streaming tool. Oh, extensions. Poll. Here we go. Manage polls. You do not have access to this content right now. Yeah, I think I have to be an affiliate. Dang it. Okay, so if you're watching right now, go follow us on Twitch so we can run polls. Because I am not an affiliate yet. Once I'm an affiliate, I can do it. We're almost there. All right, we are about 13 minutes out from FOMC. Yep, polls are exclusive to partner/affiliate channels. Darn it. Okay. So soon, we'll be there soon. Hopefully by the end of today. If you're watching on X, hop on Twitch. I think X is our biggest platform right now. X, we have 171 people viewing. So if you can, hop on. If you're on X, I would really greatly appreciate it. Link is right below the live stream. Go hop on Twitch, give us a follow, show us some love. And you'll honestly have a way better streaming experience if you go on Twitch. All right, 10 minutes, 10 minutos, and then we're on. Let's go. I know that guy. Wait a minute. I know that guy. For any new traders out there right now, this is the no-go zone. This is the no-go zone for trading, okay? As soon as you hit, right, where's the good example? Honestly, as soon as you hit basically 10 a.m., you should not be trading anymore. You should not be trading because you're going to get really weird price action right now leading up to FOMC. It's not smart to trade during FOMC. So please, if you are trading right now, save yourself the losses. Sure, you could make money, but honestly, you're probably going to lose money. Because, right, if we're looking at this, boom, break of structure, looks bullish. Look at what it does. Rips all the way back down, looks bearish. Rips all the way back up, looks bullish. Rips all the way back down, looks bearish, right? So, like, nothing matters. Structure right now does not matter on this chart because of FOMC. So, please save yourself the losses. If you're trading, close your exchange. Do not trade right now, okay? Like, unless you've been trading for 10 plus years, you should not be trading right now. Unless you know FOMC like the back of your hand and you know how to trade it, you should not be trading right now. If this is your first year, second year, fifth year, you should probably not be trading right now. Now, some people might disagree with me. I think it's dumb to trade right now in the FOMC, especially if you're not an expert, advanced trader. Even advanced traders going to get, even advanced traders will get wrecked, right? How long does it take? Pumani, what do you mean by that? Like, how long does FOMC take? Is that what you mean? Like, how long is the press conference? It's about an hour, like 45 minutes to an hour. So once it starts at in 8 minutes, should last about 45 minutes to an hour. And then once it's done, then, you know, you're kind of good to trade after FOMC is done. But even at that point, it's like end of day. Might as well just wait till tomorrow. That's my view on it. What I'm going to do today is once FOMC is over, we're going to do some higher time frame analysis to see did any structure get broken on higher time frames and then see if that's any indicator for something to happen on a bigger time frame for tomorrow or Friday. So we're gonna wait for FOMC and then see if any higher time frame structure has been broken, and then see what that potentially indicates. Did the bottom come in, or are we potentially even going lower, or are we still consolidating? So we'll see what happens. All right, we're getting about 6 minutes out. Yep, 6 minutes out. And then he might be late. I think he was a little late last time, so it might not be right at the 30-minute mark, but we'll see. It's at the 30-minute mark is when it should happen, but I think if I remember correctly, last time he was a little late. Let's see these 5-minute candles. They're probably crazy. Look at those 5-minute candles. Maybe we'll watch on the 5-minute time frame, just so we can watch a little bit more. Yeah, that gets us to 1. Perfect. So FOMC should be done at like our yellow line. Let's see. Like my guess is like right around here is when FOMC should be done. And we'll watch the chart and you'll see how volatile it is when he starts talking. There we go. We'll watch it like that. See how this goes. So put in the chat, if you're watching right now, since I can't do a poll, put it in the chat. Just type in, do you think we pump or dump for FOMC? We have 3 minutes. Put it in your guesses before. Do we pump or do we dump? Put it in the chat. I think we dump. I think it's going to be bearish. I think the news that we're going to get today is bearish. You think okay, Pumani put pump. Let's see. Pump said Maniac intern. I'm all in. What else? Are we pumping or dumping? Put in your guesses. You got trades open. He's the guy who opened the 50x Ethereum long. So no, just kidding. All right, 2 minutes. 2 minutes. And then the press conference comes. Okay, like 1 minute, probably like 1 minute out, and it should start. Hopefully they're not too late. Oh, they're fading the music. All right, I'm gonna turn it up.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard.
Howard Schneider with Reuters. Thanks for your time. So 2 things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the 5-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But, given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros of the Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low 2s in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those two kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And, the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up, but prices also went up on dryers, which were not tariffed. So the manufacturers just, they just kind of followed the crowd and raised it. So things happen very indirectly, and so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the
Because
pandemic.
you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we also we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment, because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecasts that really show significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you. There's always an unconditional possibility of a recession.
it might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months, a 1 in 4 chance of a recession. So the question is whether that, whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Chris.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that, and we will use our tools to foster achievement of our goals to the best we can, and of course we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year, and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain, and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. you're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories, which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was kind of our problem. Now it's slow, but it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Kelly. Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. Is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify. You were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. Now, of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful, rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively, well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what speed, there's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down, they tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not, we're not going to miss any evidence that longer-term or medium-term inflation expectations are moving.
Neil. Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Can I do a quick QT question? Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because, we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying the sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that. Or sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to our of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but, we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from, higher levels to pretty close to 2%. While the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter, so I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April the 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those. And so that's kind of baked into the numbers. What happens, it will be complicated, and there will be some retaliation and some not, and all that, but ultimately they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, pretty strong support. I'd just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
All right, FOMC. Everyone who thought it was going to pump was right. Big pump. It was not bearish at all in that meeting. We didn't talk about anything crypto. Last one he did. Let's see. Let's go to a higher time frame. So what time did it end? It's like 12:20. So that was only like 45 minutes. 45 minutes. Yeah, that was a 45-minute meeting, press conference. Let's go to higher time frames and see, did we break structure? We did. We've broken structure to upside. I think we filled the CME gap. We're very close to filling that CME gap. I want to know what we do here. This one is filled. This one we don't need to worry about anymore. Let's delete this guy. Okay. We are almost filling that CME gap. I think once we tap the CME gap, I think it's going to get bearish unless it begins to push up further and break structure. But I think it's going to get bearish once we tap the CME gap and fill it. I don't think we're going to pump. I think we're about to actually not have a great day. I don't think the bleeding's over. Right, let's do this. I think we're going to have this. Like it's doing essentially what I drew out before. It's going to have a fake out, break back in, boom, boom. I think it's going to do something like that. I think this is, and if we tap down these lows at 78, I think we can go all the way down to 69. Was that one? Was the price I've been saying? So, we'll see how this plays out, but it looks bullish. Could the bottom be in? It could. Oh, let me turn on that music. Could the bottom be in? It could. I'm not convinced yet. It's too bearish on higher time frames, like the day time frame's too bearish, and then if you go to the weekly time frame, way too bearish. Weekly time frame too. Looks like it's gonna fill this gap fill this gap, and then push. And we can, I think we go down to these levels down here, right in this area. Yeah, like 71. You know, what's this low is like 68. I think it's right in this area is where we're gonna tap. And then bottoms in. I'm not convinced yet. It looks too bearish on the charts. Wait, nope. I want 4 hour. We'll see though. We'll take the data day by day, right? We take it day by day, but I'm not convinced. I'm not convinced we're going higher yet. I'm just not convinced. Hold up, I gotta mute real fast. Okay, I just had to take that call real quick. But yeah, I'm not convinced yet. We'll see though. We'll see what happens at the CME gap, the top of the CME gap. This is important. But let's see. Are there gaps down here? I don't see any gaps down here, but I'm not convinced. I'm not convinced yet. But honestly, we play the orb anyway, so we don't really do the long-term plays. But we'll see how this plays out. Maybe are we gonna be bullish towards the end of the week? If we push up, if we break these highs, I will be then convinced that we're going higher. But if we don't break this high here, what is this? 97.65. We're not going. We're going lower first. We're going lower first. So we'll see how it reacts to the top of the CME gap. It needs to fill it, and it looks like it will. It will fill that gap. But now it's just a matter of will it reject and push up from the CME gap or fall? So let's go to the 1 hour. 1 hour has break of structure to the upside. Getting very close to that CME gap, so we'll see. We will see. Let's see Ethereum. Let's see Ethereum. Ethereum looking bullish. Broke out of this range. Right? Ethereum is kind of ranging right here. Ranging. Broke out of the range. I'm not... Same thing goes for Ethereum. I'm not bullish for Ethereum until we break this high. This high is 2109.5. I'm not bullish until we break that high. This breakout's pretty good, but honestly, this could be like this. Right? You got bump, 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 bump. Power 3, right? Consolidation, breakout, the fake out, then push back in, then push down even further. I'm not convinced yet. It's also Ethereum's in a key level right here. So we'll see. We'll see if it holds. See if it pushes. But I'm bearish still, personally, on everything. I need higher time frame break of structure. Like day time frame. So look at Ethereum here. Actually, this gap got filled, but look at Ethereum here. It would need to break on day time frame 2249.5 for me to be considered bullish. For me, and it's got CME gaps up here, so For me, I need to see this high break. 2249. Still not bullish, in my opinion. But we play the orb anyway, so really it doesn't matter much. All right, everyone. That's all I had for you this morning. I'm going to start logging out. You know, FOMC press conference had a major pump in the market, causing the market to break structure to the upside. We'll see if that structure holds or if it fails. But I'll see you guys tomorrow bright and early, 6:30 a.m. Pacific Standard Time, and we'll do some more mock trading to make sure our strategy is locked down and ready to go for next week. And I'm hoping we get some more big trades next week. All right, everyone, I'll see you later and see you tomorrow morning.